Hello, and welcome to another update video about Ethereum. Ethereum has now a very healthy third wave in place in the yellow count, or alternatively, in the white count, a very healthy B wave. Let's talk about the short-term bullish and short-term bearish scenarios in this video. Also, we would like to take a look at the relevant parameters that we need to observe here, like the micro support levels, which I'm going to update for you, next upside targets and resistances. So first of all, we need to establish that Ether is pushing higher, and that quite aggressively. We are still not, well, it still doesn't look like a five-wave structure to the upside. So we still only have a three-wave move up, which means that technically I cannot rule out a B wave. Remember what happened here. What happened? It was a high, okay, in this case, an X wave, which is basically very similar. It's a corrective wave. These can overshoot, and they can overshoot significantly. And this is also the evidence that there isn't really a theoretical limit to what a high B wave or an overshooting X wave can do. Sometimes I get the question, when can we rule out a high B wave? The problem is, as long as it's a three-wave move, yeah, we can't really rule it out. We can't really rule it out because a three-wave move can extend, overshoot, and doesn't really have a limitation. So also here, look at this X wave. It's ridiculous, right? Normally we say here, you know, WXY. It did overshoot significantly. Normally what you find in textbooks is they say, okay, you take the length of that wave W, and then it's the 138% retracement, and that would have been at 2,526. Now, it did overshoot quite a bit. I mean, if we measure that in percent, above that limit, another 7.5%. So does that mean it's no overshooting X wave? I mean, what else is it, right? I mean, it has to be, because it's a three-wave move. It did overshoot, and it came down in three waves afterwards. So, I mean, of course, you could find some kind of exotic interpretation. But for me, that's an overshooting corrective wave. And, you know, I'm just highlighting, look, this could happen again. If this is an A wave down, an overshooting B wave, and Ethereum just remains caught in the chop. You know, what can I say? We need the five waves. We need those five waves to really get out of this chop. And when we get five waves, then we get another support area for the three-wave pullback. The problem is, if ETH again fails to create five waves, and it failed here, it might fall back again, right? We might see the same thing happen again. WXY. Well, this could only be an A wave. We're now doing this ABC. Maybe another overshooting B wave. Really exotic count, I have to say. We might overshoot here. And then we could come down in the C wave, you know, again, maybe to that same range again. And then another attempt, right? And then we have our wave 2 here. And it would be a super annoying wave 2. Do you see that? Okay. Do you see the potential of this weird overshooting B wave? It's there, you know. So I just want to highlight that I don't want to call it a risk. It's just difficult to navigate, okay? Because it creates that impression that it's already bullish, and it is bullish. I mean, yeah, but it creates that impression that we're already in the breakout, whereas we're actually just moving in a corrective wave. And the problem is you cannot rule that out until you see this five-wave pattern. And Elliott Wave allows us to understand when we can reduce the risk or the significance or probability for that white count, which would send us down lower. So again, you know, in the yellow count, the low could be in, and we're moving up in a five-wave move, but it would need to be a leading diagonal, which is a problem because then it also looks like an ABC structure until we have five waves. So the short-term bullish count suggests, yep, wave 2 bottomed here. This was a wave 1, a wave 2, a wave 3, then a wave 4, and a wave 5. So we still need that 4-5. In the short-term bearish count, the wave 2 never finished, and this was just an A wave. This here is a B wave, and we come down in a C wave later. Both counts reasonable interpretations, what you need to ask for whenever you get two counts that go into opposite directions, which they often do, do they still agree? Do they still agree with a larger trend? And yeah, they do. Both counts are bullish overall. It's just that in the white count, we see a deeper pullback back into the green support range or just above that, in line with the previous swing lows that we've seen throughout January and February. Whereas in the yellow count, we get a more direct breakout, but also after 5 waves, we should see a more significant pullback, which, however, should form a higher low. Yeah, should maybe around 2,400, 2,450. So they both agree, For example, the yellow count could break, but we're still in an overall uptrend. Still bullish, which is great. So that's very important. Also, what you need to ask for is, by the way, the same situation when you're following two analysts and both disagree, then you always have to ask, okay, at what point does the count or the scenario of one of them fail? And then you have your answer, where that one gets invalidated and maybe the other one is working out. Either way, we have what you need to ask for is, which level distinguishes between the two counts. And that's updated now. And that is obviously moving away from the price, or the price is moving away from these critical Fibonacci levels, because the further the move up goes, because these retracements are measured in percent, percentage-wise, they always, moving away from each other, which is a simple explanation why if a move gets very much extended, the risk increases because you're moving further away from a stop loss. And in this case, from a Fibonacci level. I mean, now the key level is at 2,396. As long as this level is holding in any way for pullback, we can still make the case for another move up. The problem is, obviously, visually, this wave 4 would go too deep now when we go to the golden ratio level. And it's already the case that below the 50% Fib level, it's probably going to fail, right? So I don't even want it to go below 2,446. We've seen that here in this decline. I also allowed the golden ratio, but it just looked very deep already. So it depends a little bit on the visual assessment as well. If the wave 4 just visually seems unhealthy because it's already too deep, we can't really trust it anymore. But I always say it, below the 50% Fib level, probabilities already start to reduce, that it's the yellow count. Yeah? So that at least should give you the pullback zone, updated support levels, highlight the risk of the white count, and highlight that a B wave can easily overshoot. And then we've got here the next structural resistance, basically the 2024 high at 2,715 pretty much. Yeah. So that's the next key structural resistance. And ETH is moving into that range right now. It's going to be interesting. Something else happened that is very interesting. In the previous video, showed you the ETH BTC chart, but ETH BTC, it turned around where it needed to, as it seems. But it's too, obviously the movement is too small to be reliable. But again, ETH tries it, yeah, exactly where it needed to. So it's going to be interesting. What we wanted to avoid in this wave count is a break below 0.0505. And it tries, it will impress me if it breaks above the previous wave 4 high and in fact follow this count. That would indeed impress me, because that would be the next confirmation that indeed ETH is starting to outperform Bitcoin. But until I see an impulse from here, I cannot confirm that. Just something to watch. The potential is there. That's my update about ETH. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.